Will the market see Facebook as being on sale? Who knows? But we're going to position ourselves in case Facebook should bounce back from the black cloud that's hanging over it right now. Yeah, so Facebook, IV rank of 58 as of last night. I did not pull up Tastyworks. I'm going to do this sans Tastyworks today. But it had an IV rank of 58, a liquidity rank of 4 out of 4. And it is October 5th, and we're going to look at two bullish trades today. And if you stick around to the end, we'll talk a little bit about what we may have learned about undefined risk in pharmaceutical companies last week. All right, let's get going. Hi everybody, my name is Neil. This is Option Theory. I'm now small, and in the bottom left corner here, you can see on screen we're inside of Thinkorswim's simulated trading. I hope you'll join us and stick with us to the end. That does help me so much if you stick to the end. But I get it. If you're here just to talk about Facebook, see a trade idea or two, and then leave, that's fine. At the end, we're going to talk about Merck. So on screen here, you can see that Facebook has had some storms moving through. And then yesterday, we saw a pretty nasty drop, which brought the NASDAQ down with it, which benefited my real-life short Qs position. So yeah, thanks for that. Anyway, we're down here in the bottom band. The RSI is nearing that bullish indicator down here. So I could see us being bullish on this one. Now, normally when I do short puts, which is the strategy that was sent to us from Tasty Trade, I usually have to put that in our IRA account, because then I might end up long shares. I don't really want to go long shares. I'd like to try this whole minimizing the buying power effect strategy here. So let's go to the Analyze tab. We're in the margin account, and we're going to add simulated trade. And the trade that, as it was sent to us from Tasty Trade, was just being short the 280 put. Now, because you're in a margin account here, this has a buying power effect of $3,109. Now, that's what it says here. I know you can't see it, but I promise you, that's what it says. All right. So with that, we're in the October 29th weeklies, by the way, which is 24 days to expiration. This is a much shorter duration than normal. So a little bit outside of the Tasty Trade mechanics. Let's head over to the risk profile and check out our probabilities for this trade. Make sure your date in the top right is set to the date you see in blue in the bottom left corner. And I got my price slice set to break even right where this blue line crosses the x-axis here at expiration. And we're at 93% probability of profit at expiration. So that's pretty darn good, right? You get paid $293 should this thing stay above our short strike of 280 at expiration. I suppose we could even, kind of drag that there. That's a 92%. Is that really any different where we were? What was that? Yeah. Okay, 92% probability of that happening too. So that is high probability, but know that that probability comes at a cost of potential, bad news of $20 something, $28,000, 27 something, right? Okay, so that's scary. What exactly would that be? Let's right click that trade, choose confirm and send, and take a look at this confirm and send screen. $27,707 of max possible risk, all to make $300, let's call it. I know some people don't like that idea. They'd rather spend $293 and have unlimited unlimited potential, right? So that you could make that much, maybe. Yeah, I get that. Go ahead if you want to try it. We did a few series on buying calls and seeing how that worked out. Not so well for us. But I want to go ahead and hit send and put that into my margin account. And we'll go ahead and take a look at an alternative for the IRA account that also reduces buying power. So let's go back to full screen here. Let's switch over to the IRA account. And let's go back to we're right where we want to be. Okay. So in this case, what I'm looking to do is follow the Tasty Trade mechanics pretty closely. It's a $5 wide spread here because there's $5 wide increments. So we're looking to hit the $166 sweet spot if possible. And to balance that out with probabilities, what I found here is selling the 315 put. I'm going to hold down the control key and click on the 310 ask. And now I've got myself a vertical down here that collects 155, not 166. So we're close, right to that 1/3 the width of the strikes. And then let's take a look at our probabilities. Boy, they sure aren't 93%, right? But let's head over and set those slices. Now we're looking at 66% probability of profit at expiration. And of course, we gave up that high probability in order to get a reduced buying power effect. So the buying power effect on this one is $500 according to Thinkorswim's little option down here. This little thing you click says buying power effect. But realistically, it's $345 because that's the most you could possibly lose on this trade. So if that's something that comforts you, knowing that you don't have $27,000 of risk, you only have $345, you still have a 66% probability of making a profit at expiration and probably a better P50, right? So that P50 would have been nice to know, probably been a good idea had I pulled up Tastyworks, but shame on me, I did not. A little lazy, sorry. Okay, I'm going to right-click this trade, choose confirm and send, and I want to bring that up for you to see here. $155 of max profit. We would look to manage that at about $75 worth of profit if you're following the Tasty Trade mechanics. And max loss of $345. That's in my IRA. That's going in there. And let's compare those trades and see which one works out better for us. Speaking of comparing trades, this is where I'm going to switch over to talking about Merck. So if you've got everything you wanted, thanks for coming along. I hope you come back and visit me sometime. But here we go. So last week we put on a strangle in Merck, and I remember commenting about how, you know, yikes, right? A naked call in a pharmaceutical. Those things are known to have those like, hey, good news tanks it and great news sends it soaring. Well, if you were paying attention to the news last week, I think the day after we put this trade on, maybe, Merck announced that they have a drug, a pill, that may treat COVID. Well, you could imagine that had a pretty good effect on it. So let's go ahead to the charts over here, and let's pull up Merck. And at the end, I'm going to put a card up for you guys to watch the video that we did on this one. So yeah, let's pull that up. Woo! That was a gap up, friends. And not shockingly, gapped up and then has, well, it gapped up again, but is beginning maybe to fill back down to where it was. Or fall back down, fill, fall, whatever one works for you. So, yeah, I closed that trade real fast because who knew how high it was going to go. And I took a loss on this one in my margin account. So let's see if I can go back and show you that damage. Account statement. Type in Merck. That one back. Let's go 7 days. Why is it not even showing me? Oh, because that was trade history. Huh. That's weird. Come on, show me the Merck. Merck. Huh. I'm a little confused right now. Pretty confident I had closed that. Oh, because I did that. I'm in the IRA account. There we go. There's the Merck there. Okay, we sold it for $97 and had to buy it back for $567. You dirty rat. Right, so Merck. Let's go and sort that by symbol so I can actually find it. Merck. Who doesn't like a $500 loss, right? Yeah. But as you saw over here in the IRA account, right? Let's take a look at that position here. We still have this on. This was our Jade Lizard. It blew right through the call strikes. But now we can just take a look and have a gander at this here, risk profile, right? Blew through the short strikes. Yes, we're losing right now, but should it stay where it is? That's fine. We'll make $9. Really, $6 if you count commissions, right? Or we could hope that it falls back down to where it was, and we could maybe, you know, get what we wanted. Hopefully it won't, you know, blow up in its face and something awful is discovered about this med. But we're in a sweet spot, and I can see, hopefully you can see now why it is a little risky to have a naked call in a pharmaceutical and maybe to define your risk to the upside like this. So, wonder what your thoughts are on this one. Did you do this trade with me? Love to hear from you. Did you do the strangle? Did you get out in time? I hope you did. All right. So that's that. Big thumbs up to you if you made it to this far in my video. I do appreciate that. If you like what you get here, this is what we do. 4 to 5 days a week, we put trades on in our simulated trading platform to get our learning without the real risk so that you feel confident and comfortable when it's time to trade your real dollars in the market, whenever that may be for you. All right. If you want to get the same emails I get from Tasty Trade with trade ideas that we do here, head on down to the description. There's a link there. Sign up for those emails. We use the cherry bombs. And yeah, that's it. If you're ready, come on back. When you're done subscribing to those emails, and subscribe to this channel while you're in the mood. All right, until then, may the market be with you.